Hey traders, checking in on the stock market today. Short-term fears alleviated as a bounce got going. Is that enough for us to be confident in healthy weekly higher lows? Or are the bears going to show up with a vengeance tomorrow? Let's see what key levels stand out in the short term.
Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So we're going to do a little bit different today. Going to go through the technical analysis as usual, but at the end of the video, I'm going to run through pretty much what my trading day was. It was a nice solid flow day, and I will relive it to a certain degree. So starting off with SPY, we had a notable bounce. It was a higher open. We knew a higher open is not enough for us to be confident in the bulls. They have to prove it with follow through. So we saw the open and we saw profit taking on the higher open. The 5-minute time frame had a fast little drop here, and it then shaped up for a 15-minute equilibrium with our high of the day, low of the day, lower high, higher low, and then there's your bull break. So at that point in time, it was clear that the bulls had followed through, and then we kept a 5-minute uptrend and ran fairly significantly further from there. And we started the morning with the S&P 500 futures chart where we were watching for a 4-hour lower high to be set. We set that lower high, the next candle very quickly set a higher low, and then saw that continuation. So I'm finding clarity right now on the 12-hour time frame on this futures chart, and I'm looking at the high of the last bounce attempt, which was Thursday, and we're looking for a lower high to form compared to that level. Bulls are going to be hoping that it's an inverse head and shoulders here, where once we top out on this 12-hour move, we hold the low of Friday for a higher low, and then we change the trend back in favor of the bulls to show a significant shift in momentum and the bulls regaining their control. So SPY, I was watching SPY on the 5-minute time frame and it looked very similar to Thursday. And this is Thursday's candle, and you can see it's fairly similar today. The difference is obviously the big upper wick versus the lack of a big upper wick. So if we look at those 2 days in comparison, why were they similar? The bulls controlled the vast majority of the morning, and then we just started getting heavy, and we started seeing bulls slow down a little bit. So we were watching for hourly consolidation, and that was today. And on Thursday, it was the same thing. The bulls had control all morning. They're riding the 5-minute uptrend, and then they just start slowing down, and then they sold off into the close. The top was hit at 1:40 p.m. Eastern. So I'm looking at today's 5-minute chart, and in my mind flashes, this looks exactly like Thursday. So I entered short, and it just so happened it was 1:30 at that point in time. So again, everything was aligning up like, wow, this looks really similar. The bear break started, and then we saw no follow through. If we were going to see follow through, we would have had to have confirmed the 5-minute downtrend for bears to prove it to us. They didn't. It was a little drop, and then it was just 5-minute higher lows from there. So just to go back, I was swinging a bearish position in SPY. I was short SPY from last Monday, and I've just been holding it as it has been hedging any long-term exposure that I have in my portfolio. So seeing this setup here, I put my stop over the high of the day on half of that short position. And as soon as I get stopped out of that, I then go net long in my portfolio, which was previously just a bit net short due to the size of that SPY bearish position. So I exit half on this bull break, and I re-entered half up here in the 376.50s, and then I stopped out of that half again on a new higher high. I am still holding half of my short, again, to hedge against my long-term positions. I really like where my account is right now, and if we were to see any weakness overnight and a lower open, that would help to offset any pain that I saw. So if we get a 12-hour trend change on the S&P 500 futures chart, I will exit all my shorts and be back to a fresh, clean slate. But for now, half position, and bulls definitely proved it, which is why I exited half. The question is, do we get follow through? 1 day is not enough for me to exit that position personally. IWM, so bounce underway. Anything under the all-time high of 217.91 is just a daily lower high, and the bears would have to prove it with a confirmed daily downtrend. So a lower high and lower low would be needed. If the bulls can just recover back up to the all-time high, then they are back in complete control. So that all-time high is 217.91, and our new key support level is the low of that pullback, 204.84. QQQ. So again, significant bounce. It was clear that QQQ was propelling the market higher, faster today. We would have to confirm a daily downtrend for the bears to prove follow-through, which means our new key support level is 312.76, and we're looking back up at the high of Thursday. That's the next most important resistance level for me on a lot of individual names. 326.42 is the high of Thursday on QQQ. Why the high of Thursday? Because that's the last notable bull attempt where we rejected, set our 6-hour lower high in the S&P 500 futures equilibrium we were watching, and then the bears took over from there. So that Thursday high, key short-term level, and we'll see if that's in play tomorrow on some of these names. Also for QQQ, we've got Google and Amazon earnings tomorrow after hours. That's going to have short-term implications, and it was clear that bulls were buying those two names stronger than the rest of the tech sector names because of their incoming earnings. XLV held the low of Thursday or Wednesday on Friday, and we're now just in a tightening range where the levels that I care about, 114.05 support and 117.47 resistance. 4-hour tightening range. So not a significant bounce at this point. Still short-term bearish control, I would call this, on healthcare. The financial sector, daily inside bar, bulls would have to break 29.88 to shift short-term momentum. Again, that's the high of Thursday. Anything under that level is just a daily lower high. Biotech sector bulls clearly standing out. They've been doing so for quite some time. We had a base of support down here at 148.88, 148.81. We held it Friday, and here we are at new all-time highs with a strong close. Very clearly, the biotech sector is a lead bull in this market environment, and now 148.81 is our line in the sand level, and blue skies up ahead. SMH, pretty solid move. High of Thursday broke, so that's notable to me. Low of Wednesday, high of the Thursday bounce, held the low of Wednesday, broke the high of Thursday. I know that's a 4-hour trend change, shifting that momentum back to the bulls. So I'm zooming back out to the daily. Anything under 246.79, just a daily lower high, but a solid bounce. And look at that weekly time frame. You know, if that's our low of consolidation, and if fear gets alleviated from here by SPY and all these other sectors, if Amazon and Google give us bullish earnings reaction, that's going to be key to help alleviate fear. But these weekly time frames remain extremely strong on a lot of names. So bears definitely have to follow through if we are going to shake up weekly strength and uptrends. TAN, the solar sector, 106.88 support, still barely hanging on here. It's a triple bottom 3 out of the last bunch of days, but 3 times here we've touched it. Bulls need to get over 113.70 to have a convincing bounce off of that level. And that is our short-term base, as weekly consolidation is extremely minimal at this point. If that short-term base breaks, we look to the weekly EMA 12. MSOS, strong close at the end of the day. An article came out about the leaders in Congress and the Senate who are interested in making changes and the steps that are coming. In my opinion, it was a lot of fluff, just in terms of no clear concrete. We're going to do this. We're going to do this by now. You know, it's a lot of up in the air planning to do this kind of stuff. But it ended in a little pump at the end of the day. This last 20 minutes here, bull volume poured in. So the daily bounce at this point is pretty decent. It looked like a bear flag. It's trying to negate that bear flag. Anything under 46.49 is just a daily lower high, and the bulls are hoping this daily bounce is significant enough to change the daily trend and set a quick weekly higher low, keeping things very healthy. Again, I have 1 entry in MSOS from last Wednesday, and I do want more. At this point, I'm being patient to top out on this bounce, and when we see a daily higher low, I will enter and use the recent low as my stop. I'll build more position, and I've just got a position right now that's keeping me from feeling any FOMO, because again, making money as it goes up, but want more exposure. The VIX. So the VIX, those 2 daily candles did not look clear to us at all, or to me, at the end of last week. So I zoomed in, and the hourly higher lows were clear. 27.40, 29.20, ended Friday 30.50, and we started this morning still holding those hourly higher lows. As soon as we broke them, then there's your clear bear break. So 30.50, and essentially it was the low of 31, then 30.50, And we're now looking at anything under 34 as an hourly lower high. So with that bear break, I zoom out. I look to the low, the lowest price we've seen since that breakout. And 27.40 is a key short-term level from here. But daily consolidation underway. We're now looking for a daily higher low. So the dollar stood out with very strong bullish action today, and it broke short-term resistance. 91.02 and 91.24 are the next levels. This is notable, and pretty notable that the market bulls are in full control. The metals were up. We'll talk about that in the Reddit silver pump here. And pretty much we weren't seeing weakness in our assets. So going to continue monitoring as always. The daily bull cross of this 12 and 26 period moving average for the first time in 3 months is notable. And again, we're watching this 6-month potential equilibrium, which we could trade within this range for years. It's been forming for 4 years. If we change the weekly trend bullish from here, it's entirely possible that we're going to watch this tighten up for years. So the weekly time frame, this move from the low of 89.20, we're just looking to top out wherever that ends up being. Obviously, the bulls want as much space as possible to set up the weekly trend change, but that's what I'm watching for from here. How much space is created, and do we follow through with the higher low and higher high to confirm a weekly trend change? And that has not happened since the COVID top. So that would be notable if that were to happen. So gold seeing a bit of a bump. Commodities in general saw a bit of a bump, and in my opinion, it looks like it is due to this Reddit pump. And again, it's a trending Twitter hashtag silver squeeze. And there's a lot of people that are saying that because Citadel has a ton of silver, that they are planting bots on Reddit and they're trying to get this to catch fire, when in reality it's not, grassroots Reddit picking a name to pump. There's a ton of gold and silver bulls out there that have been bulls for decades that say, that's great, it's speeding things up, but the setups were there. I'm in gold and silver because they're bullish setups in my swing position. So I love the Reddit pump and I love waking up to today's gains, but it's definitely a trade that's there regardless. And there's a ton of scarcity now on some of these sites where people are buying silver. And I must admit, Saturday night, I was up late at night buying silver on AppMex, and that was right before they halted any more orders because they realized silver is going to gap up Sunday night. We can't sell out of everything at Friday levels when we know the price is going to be higher next week. So I just snuck that in, and then they halted any more buying, and now there's any more selling, and they're selling now their silver at the prices reflected by today. So certainly makes sense on their part to do that. But this is a bullish, the narrative is there for the weak dollar and the strong metals, and whether or not, it's manipulated, I haven't looked into it enough. I can assume it's manipulated. We did see JP Morgan, I think it was them, fined $960 million, which is a drop in the bucket of annual profit, but for manipulating the metals market. So bulls are hoping that there is a run on physical silver that traps some of these shorts. But in the end, it's fun to follow that narrative. It's the charts. I'm in this trade for the charts, and I'll get out of this trade when the charts tell me to. But silver is going to be a lot of the trade analysis that I go over here at the end. Gold is a daily inside bar. The levels that I care about, the double top at 1875 and the key support, a daily higher low at 1831. If we double top and then break 1831, that's definitely a red flag for the bulls. We need to break that level and make our way back up towards our recent highs. We're still a long ways off from that all-time high. I entered these metals positions. I've been trading the metals bullish ever since the long-term breakout. So got a lot of metals gains swing trading in 2020 and re-entered on this monthly higher low. So I entered pretty much, I think it was December 23rd, where I re-entered, put my stop under the low of this monthly consolidation and hoping for all-time highs on gold. So gold is obviously lagging silver significantly. Silver is in the spotlight. If gold were as strong as silver, we'd be at all-time highs right now, because the same setup on the monthly time frame for silver and the same reason for entry, monthly support, entered on this candle somewhere towards the end of the candle, stop under the low, and now we have the continuation. It's not a significant amount of follow-through yet, but we were very overextended today, so we'll give the bulls another chance here. And the next resistance zone, we're looking up into the mid-30s as a key level. In the end, it's just healthy 4-hour consolidation, no major red flags right now. So we'll see what kind of continuation we get from here. But, you know, I'm bullish, diversifying in silver and gold physical. And as long as we're in monthly uptrends coming off the all-time high on gold, definitely bullish the metals, trading them via my stock account as well. So I stick them in my swing trade account and don't day trade them. Although with this silver volatility, I'm definitely day trading around these positions. And that requires me to observe. You know, I'm trading SLV today. I day traded it and I have to observe, what is the bid and the ask spread like? What is the volume like? How is it correlated to SPY? How is it correlated to the spot price of silver? These are all things that I need to be comfortable with. And it's like, I joke around and I refer to it like dating someone. I'm now dating SLV as a day trader. I have to get to know them. I did the same thing for Tesla, and Tesla was my play of 2020 as far as day trading. I did the same thing for NIO. You have to observe it and get comfortable with it. If you're trading a new ticker every day, it's really hard to get in that flow. When you get confident and you know a ticker, it's night and day difference as far as confidence and comfortability. And even just knowing my order sizing and what would be a day loser, and just, you know, having the round share numbers that I always use, comfort and habit are things that animals love, and we're animals. So get as comfortable and in as much of a routine as you can with your trading. That was a offshoot rant. Miners, GDX, gap up open. Same thing as Friday, which is gap up and then profit taking, but still keeping an hourly uptrend. And what's most notable to me here is, again, I haven't actually confirmed this, but just through observation, I am assuming that the junior miners, GDXJ, just have more exposure to silver, whether it's, you know, through the secondhand scraps from mining other stuff. But you see this resistance of 36.32, and that's pretty much the highest price of mid-January until now on GDX. And you look at GDXJ, and it's clearly outperforming. You know, today we got way over that resistance level. So a bit more strength. Pretty much the way that I used to compartmentalize it in my brain is, if I'm trading miners, and again, it's something you want to get really comfortable doing if you're doing it, when gold is stronger than silver, I'm looking at GDX, and when silver is stronger than gold, I'm looking at GDXJ. So watching for a daily trend change here. Once we top out and lose the hourly uptrend, bulls have to prove the follow through with a higher low and higher high. We've got a double bottom down at our monthly supports on GDX and GDXJ. So a very clear level that the bulls are going to try and maintain from here, and we have to confirm the daily trend change to have confidence that that low can hold. Oil is still extremely strong. Looks like a weekly bull flag. Big green day today. Again, commodities across the board had a good day today. There's your weekly bull flag. We would have to drop down and break 51.44 to negate that. Resistance is pretty much just 53.83 and 53.94. Natural gas bulls had a huge day. Daily trend change confirmed. 2896 resistance confirms a weekly trend change if it breaks. And then we look for monthly continuation. And look at the monthly trend change here. Wow, I just went on a rant on the live stream talking about the significance of monthly trend changes in names that had FOMO and euphoria and then faded forever. And I'm talking Canadian MJ, cryptocurrency, DDD, and GoPro, and natural gas. And my comment was, you know, if you go back in hindsight, it looks like when the monthly trend change is bullish, that it's way too late on the move. And on all those examples, they all went 100% plus beyond the monthly trend change confirmed. So I'm certainly not suggesting natural gas is going to do that, but natural gas is working on its first monthly trend change after a massive euphoria pump and massive fear and despair dump. And the bull cross of the EMAs is notable to me. Keep an eye on natural gas.
We had Daniel just drop a PayPal. Daniel says, do good things, and dropped $100.
Holy cow, what the heck? What the heck in hoo-ba-ba? Daniel, thank you for the $100. Oh my God. Oh my God. I'm gonna take that $100 and I'm gonna help pay for the repair of EJ's hearing. EJ, I would like to, if you cut your ears off, you let me know. I'm gonna send you some money because I know you're gonna need some Band-Aids for your ear, my friend. I don't want you going Van Gogh style, baby. Yeah. Oh, Daniel, thank you for the $100. for the $100. Daniel, thank you for the $100. Daniel, thank you for $100.